Listen to me right now because what I am about to tell you is going to shake you to your core, and if you think this does not apply to you, if you think you are safe sitting in that chair scrolling past this, then you are already losing the battle that the IRS has been quietly winning against you for years, and you do not even know it yet. And that is exactly the kind of ignorance that costs people thousands of dollars every single year. So wake up and pay attention because we have only 13 days left before April 30th and the clock is not waiting for anyone. Let me tell you what is actually happening right now and why millions of Americans who received Social Security lump sum payments are walking straight into a tax trap that nobody warned them about. And this is not some conspiracy theory, this is not some political scare tactic, this is cold hard IRS law sitting right there in black and white in Publication 915 and on Form 1040, and if you or someone you love received a retroactive Social Security lump sum payment, especially one tied to the Social Security Fairness Act that eliminated the windfall elimination provision and the government pension offset, then you need to hear every single word of what I am saying right now because your financial future depends on it. Now here is what most people do not understand and what the system absolutely does not want you to figure out, and that is the fact that the IRS requires taxpayers to report all Social Security benefits in the year they are received, even if that payment includes benefits from earlier years, NAP tax, which means if you got one big check, one massive retroactive lump sum covering 2 years, 3 years, even more of back payments all at once. The IRS treats every single dollar of that as income in the year you received it, and that single rule right there is how ordinary, hardworking retirees and disabled Americans suddenly find themselves pushed into higher tax brackets they were never supposed to be in, facing tax bills they were never supposed to owe, and feeling betrayed by a system they paid into their entire working lives. And here is where it gets even more brutal, because the Social Security Fairness Act alone affects more than 2.8 million beneficiaries who receive public pensions, including teachers, firefighters, police officers, and government workers, CNBC, and these are people who dedicated their careers to public service, who played by the rules their entire lives, who waited through delays and appeals and administrative backlogs just to finally get what was owed to them. And now that the check has finally arrived, the IRS wants its piece, and most of these people have absolutely no idea how to navigate what comes next. But here is what they are also not telling you, and this is the part that changes everything if you act right now before this April 30th deadline, and that is the fact that the IRS actually allows a special calculation method called the lump sum election that can dramatically reduce how much of that benefit is taxable in the year of receipt, NAP tax, and this method is completely legal. It is built right into the tax code. It is sitting there waiting for you to use it, but the catch, and there is always a catch, is that you have to know it exists. You have to know how to apply it, and you have to act before the deadline hits, because once that window closes, it closes hard. Let me break this down so there is zero confusion, because time is running out and complexity is the enemy of action right now. And the way this lump sum election works is you refigure the taxable part of all your benefits for the earlier year, the year the benefits were actually owed, using that earlier year's income instead of your current year's income, and then you subtract any taxable benefits for that year that you previously reported, and the remainder becomes the taxable part of the lump sum payment, Internal Revenue Service, which sounds technical, but what it means in plain language is this. Instead of having your entire lump sum taxed at your current higher income level, because it got stacked on top of everything else you earned this year, you get to go back and calculate it based on the year it was actually supposed to arrive when your income was lower, and in many cases, that single move can save people thousands of dollars in taxes. And here is something crucial that far too many people are missing as they panic about this deadline, and that is that using the lump sum election does not require a taxpayer to adjust an earlier return, nor does it require filing an amended return. CNBC. So there is no going back to dig up old paperwork for a full amended filing. There is no opening old tax years back up. It all gets handled right there on your current return. And if the calculation results in a lower taxable amount, you take it, and if it does not, you simply ignore it and move on. Which means there is absolutely no downside to running this calculation, and every possible reason to do it before April 30th. Now, I want you to understand the scale of what we are talking about here, because numbers make this real, and real is what we need right now, and the federal government can tax up to 85% of your Social Security benefits, Kiplinger, and when you stack a retroactive lump sum on top of your regular income, your combined income can rocket past the thresholds that determine how much of your benefits become taxable, and for a single filer, the base amount is $25,000, and the upper threshold is $34,000, while for married filing jointly, the base amount is $32,000, and the upper threshold is $44,000, tax calcub, and the moment your combined income crosses those lines, your benefits go from 0% taxable to 50% taxable to 85% taxable. And that is not a gradual slope, that is a cliff that a lump sum payment can throw you right off of without warning. And I need to address the people who are sitting there thinking they already filed, thinking they already submitted their return and moved on because the April 15th main deadline already passed. And to those people, I want to say, do not give up yet, because if you filed an extension, and many people do, your extended deadline falls later, and you still have time to get this right. And if you did not file an extension, and you have already submitted without using the lump sum election, then you need to be talking to a tax professional right now about what options remain available to you, because sitting and doing nothing is always the most expensive choice you can make. And let me talk about something that goes even deeper than just the tax bill itself, because the IRS expects individuals to pay their federal income taxes as they earn or receive income, either through withholding or quarterly estimated tax payments. And when an individual's withholding and estimated tax payments fall short, they may owe an underpayment penalty on top of everything else. Federal Employee Retirement System. So it is not just about owing more in taxes, it is about potentially owing penalties and interest on top of that. And for people on fixed incomes, for people who are already stretching every dollar, that extra hit can be genuinely devastating, and it is entirely avoidable if you take action right now before this deadline. There are also additional planning dimensions that most people never even think about, and that matter enormously for your total financial picture. And one of the biggest is Medicare premium impacts, because proper handling of lump sum Social Security benefits opens the door to broader planning conversations, including Medicare premium impacts and future income management, NATP tax. And what this means is that if your income spikes dramatically in a given year due to a lump sum, you can face higher Medicare Part B and Part D premiums the following year through what is called IRMAA, the income-related monthly adjustment amount. And that is a cost that follows you into the next year like a shadow, but with the right planning and the right elections made before this deadline, you can reduce or potentially eliminate that additional burden. And I want to speak directly to the teachers, the firefighters, the police officers, the federal and state workers who waded through years of the windfall elimination provision and the government pension offset crushing what they were supposed to receive, because the Social Security Administration announced that beneficiaries affected by the WEP and GPO would receive their one-time retroactive lump sum payments and higher monthly benefit payments, representing years of missed money finally arriving in a single payment, Federal Employee Retirement System, and you earned every cent of that money. You paid into this system, you served your communities, you waited, and now the absolute last thing that should happen is that a preventable tax mistake eats away at what you rightfully have coming to you. So what do you do right now with 13 days on the clock and everything on the line? You locate your SSA 1099 form, because that is where your lump sum payment is reported, and it is the foundation of everything that follows. And you look at box 5, which shows your net benefits, and you determine whether any portion of that lump sum covers benefits from an earlier year, because that is the trigger for the lump sum election. And then you or your tax professional work through worksheets 2 and 4 from IRS publication 9 of 15 to calculate whether the election lowers your taxable amount, And if you received a lump sum Social Security payment in 2025 that includes benefits owed for an earlier year, you may be able to use the lump sum election method, which can reduce your taxable amount, California Today, and you check the box online 6C of your Form 1040 to make that election official, and you do not leave that box unchecked just because you do not understand it. You figure it out, or you get help figuring it out because the cost of ignorance here is too high. And for those of you who do not already have a tax professional, who have been doing your own returns, who thought this year was simple enough to handle alone, I am telling you right now that a qualified tax professional, a CPA, or an enrolled agent who knows Publication 915 can potentially save you multiples of what their fee costs on a return that involves a Social Security lump sum, and the clock is ticking, and finding that person and getting that appointment needs to happen this weekend, not next week, not 2 days before the deadline, when every office in the country is slammed this weekend, because preparation beats panic every single time. Now here is what I need from every single person watching or reading this right now, and this is where your reach becomes someone else's lifeline. Share this, comment on this, tag every retiree you know, tag every teacher and firefighter and government worker who might have received a lump sum this year, because the people who need this information most are the ones who are least likely to encounter it organically. They are not following tax influencers. They are not reading IRS publications for fun. They are just trying to live their lives, and one share from you could be the difference between someone getting hit with an unexpected 4-figure tax bill or someone walking away with thousands of dollars protected because they knew what the system actually allows them to do. The IRS is coming for your Social Security lump sum, and it has 13 days to do it. The question is whether you are going to let it take more than it is legally entitled to, or whether you are going to pick up every tool available to you under the law, use every election, claim every protection, and fight back with knowledge. Because knowledge right now is the only weapon that matters, and the clock is already running.